The central bank bonanza ahead of the holidays commences this week, which will probably create a lot of volatility in the FX market. This is the week ahead at XM.com. I'm Christina Marujos, and with me today is our lead market analyst, Rafi Boyadjian. Rafi, starting with Australia, the Reserve Bank of Australia will probably hold rates steady when it meets on Tuesday. How might the Aussie react?
Well, like you said, Christina, the RBA is expected to hold rates on Tuesday, and I think this is pretty well been communicated from recent remarks from Michelle Bullock and other RBA board members, because they're so far, despite the recent declines in inflation, they don't seem ready to change their stance in terms of becoming a bit more dovish, and the reason for that is because underlying inflation in Australia is still above the RBA's 2 to 3% target band. They're worried, about lingering price pressures. So even though the RBA is open to the possibility of cutting rates a little bit earlier than expected, I think on the whole, at least for the December meeting, we shouldn't really expect any shift in the language. So for the Aussie, we're probably not going to see a huge reaction, and what might be a bigger driver for the Australian currency next week is data and announcements out of China, because of course, apart from domestic policy, the Aussie is hugely driven by what happens to Australia's major trading partner, China. And in China, there are growing fears that the country is headed down the Japan path in terms of falling into a deflationary trap. And so Monday's inflation data is going to be very important to see whether or not inflation remains very low or just below zero. And also, we're also going to be getting some trade data as well later in the week. So given that exports is currently the only major driver for the Chinese economy, that's going to be quite important too. In addition to all that, we might get some announcement about a possible stimulus, because there is going to be another one of those economic meetings attended by China's senior political leaders, and so there's a possibility we might get some fresh stimulus announcements.
On the other hand, the Bank of Canada has been cutting rates quite aggressively. Do you think we can get another 50 basis points rate reduction when the bank meets on Wednesday? And where would that leave the loonie?
Well, that is right. So Bank of Canada has been quite aggressive, probably the most aggressive so far out of all the major central banks. And this is unusual for the BoC because they don't tend to diverge too much from the US Federal Reserve. However, maybe at this meeting, this might be a bigger consideration for policymakers because we've already seen, several rate cuts, the last one being a 50 basis point cut. Now, there is, I think, about 50-50 chance whether they're going to go 50 or 25. In support for another 50 is the fact that the economy remains kind of sluggish still, and on top of that, businesses are faced with the threat of 25% tariffs by incoming US President Donald Trump. On the other hand, we did see an uptick in inflation in both headline and core measures of inflation in the last report, so maybe that might make policymakers become a little bit more cautious. Still, it's going to be a very close call, and I think either way, we should see significant reaction in the Canadian dollar to that decision on Wednesday.
Now turning to Switzerland, the Swiss National Bank has a new chairman, and this will be the bank's first meeting under his leadership. So there's going to be quite a bit of anticipation about what to expect when the bank meets on Thursday. Are we likely to get another rate cut, and what kind of tone do you think the new chairman will set?
Well, I think that's for those exact reasons why there's, it's going to be quite an interesting one, this December meeting by the SNB. As you said, Thomas Jordan has left and has been replaced by Martin Schlegel. And so we've already heard some remarks from Schlegel. He's been kind of dovish because he's actually been floating the idea of negative interest rates. And the reason for that is because the interest rates in Switzerland have already fallen to 1%, so there isn't a huge lot of room to cut further. Despite that, there's I think more than 50% probability, at least according to the markets, that we will get a 50 basis point cut. Up until now, the SNB has been cutting by 25 basis points, and the reason why we might get a bigger cut this time is because CPI has fallen below 1%, although it did edge up a little bit to 0.7% in October. This was below expectations, so inflation is no longer a problem in Switzerland. Growth isn't too bad, but it's not too great either. And so there is a real risk we might get a big cut. If though they do stick with the 25 basis point cut, we could see the Swiss franc rise against the US dollar a little bit, but probably not too much, because I think even if they go with 25, I think the new chairman will probably strike quite a dovish tone.
Thursday is going to be interesting because the European Central Bank also meets that day. The euro, of course, has been on the back foot lately on the political crises in France and Germany, and of course, weak growth across the eurozone. So this is making things harder for the ECB regarding monetary policy. What do you think we will hear from the bank on Thursday?
Well, that is right. So ECB has a lot of headaches at the moment. It's not just economic ones, but also political ones. And given that we're facing all these woes in the euro area at a time when the economy is already quite weak, and inflation, although it's kind of picked up a little bit, it's still relatively low. The markets are kind of anticipating, or at least some traders are anticipating, a 50 basis point cut by the ECB this time. However, we've heard from quite a few policymakers, including President Christine Lagarde, and none of them have committed to a 50 basis point cut. In fact, most seem to be leaning towards a 25 basis point cut. So if we do get 25 basis point cut, we could see the euro potentially rise a little bit against the US dollar. And again, I think we are unlikely to see Lagarde committing to any particular rate path. So it is possible that the outcome of the meeting will be quite positive for the euro. But on the other hand, if we do see growth and inflation forecasts being revised lower, I think that alone could be quite negative for the single currency.
And of course, speaking of inflation, we'll be getting the November inflation report out of the United States on Wednesday. And of course, this report will be crucial as the Fed has been sending some mixed signals regarding its December 18th decision. So how might the CPI report shape market expectations, and how might the US dollar react?
Well, yeah, I think investors are a little bit confused as to where the Fed is headed at the moment, because on the one hand, policymakers seem to be sending a clear signal that rates are coming down, inflation is converging towards their target. But we're not quite there yet. They're still a little bit worried about inflation. And like the ECB, we've heard from quite a lot of Fed officials, including Chair Powell, and none of them seem ready to commit to a rate cut in December. So it's still likely we might see a pause, although probably we will get a cut, and that will probably depend mostly on the incoming CPI report on Wednesday. If we see stronger than expected data, although it's forecast to edge up a little bit, the headline CPI, but if it rises more than that, I think there's an even bigger chance the Fed will stay on pause. But should we see any downside surprises, I think given the dollar's recent outperformance, that could be quite negative for the US currency.
Rafi, thanks so much. This was the week ahead here at xm.com.